Warren Buffett is scooping up stocks. Institutional investors that have at least $100 million in equity assets under management must report their holdings to the U.S. Securities and Exchange Commission on a quarterly basis via Form 13-F. As a result, retail investors get to see behind the curtain of some of the biggest and most successful hedge funds and money managers in the world. In today's video, we will tell you about 7 stocks Warren Buffett owns you should also buy. Number 7. SnowFlake, SNOW. Berkshire jumped a little deeper into tech stocks during the third quarter by adding SnowFlake to its roster. Buffett purchased 6.1 million shares of the cloud-based platform provider. Warren Buffett's Berkshire Hathaway scores $1 billion gain on SnowFlake stock. The billionaire investors company spent about $735 million on 6.1 million SnowFlake shares when the cloud-based platform went public last month. Berkshire invested in 2 tranches. The first saw Buffett buy $250 million of Snow at $120 a share in a private placement. Also, Berkshire bought an additional 4 million shares at the debut price of $253.93 for a total investment of $1.27 billion, or an average price of $207.33. It is widely thought that either Todd Combs or Ted Weschler was behind the idea to buy into the initial public offering. However, you can be sure that Buffett gave his blessing, as it's the holding company's 20th largest position. A little more than 2 months later, Berkshire's 2.2% stake in SnowFlake is up 48% through November 25th and worth approximately $1.88 billion. Whoever was responsible for the purchase should take a bow. Heading into 2021, investors will want to keep an eye on its pathway of profitability. It had an opening loss of $358.1 million in the 2019 fiscal year. It's a keeper as long as Berkshire owns it. Number 6. Pfizer, PFE. Warren Buffett's Berkshire Hathaway is making large bets on big pharma companies. Berkshire bought 21 million shares of AbbVie, 22 million of Merck, and 3.7 million shares of Pfizer, and nearly 30 million shares of Bristol Myers Squibb in the third quarter, according to a new 13F regulatory filing with the Securities and Exchange Commission. Pfizer is an American pharmaceutical corporation. The Berkshire Brain Trust hardly went on a lamb with its addition of Pfizer in the third quarter. WhaleWisdom.com says the company bought 3.91 million shares of its stock. Berkshire's F13 says it bought 3.71 million shares. CNBC's Berkshire Hathaway portfolio tracker has it at the latter, so I'll go with that. Needless to say, it represents half of 1% of Berkshire's $250 billion portfolio. It's a drop in the bucket. It's possible the powers that be believe an investment in one of the likely novel coronavirus vaccine winners is a good idea in combination with a Biden victory. Buffett paid approximately $36.70 a share for Pfizer stock. As I write this, it really hasn't made any money off its investment. I'm sure that once Pfizer gets the emergency use authorization tag, it's meeting with the Food and Drug Administration on December 10th. Investors will pile into the stock. However, as is customary with Berkshire's regulatory filings, not everything done during the quarter is public knowledge at this point. The Pfizer bet may turn out to be larger. It's a safe bet with a healthy 4.2% dividend yield. In addition to the potential vaccine candidate, Pfizer has a diversified portfolio of brands including Prevnar, Ibrance, and Eliquis. The stock trades at a forward earnings multiple of just 10.6 and pays a 4.2% dividend. Buffett's new stake is worth $133 million. Number 5. Kroger, KR. The one thing about a pandemic is that people still have to eat. Grocery stores have been essential businesses throughout the economic shutdown, and Kroger's first quarter numbers confirm the company's 2020 strength. In fact, supermarket companies have always been favored by Mr. Buffett, including Walmart and Costco. Grocery stores continue to serve Americans, and that means higher sales. In the third quarter, Buffett added a little over 3 million shares of its existing Kroger holdings. That brings its total to slightly less than 25 million shares. On a market value basis, Kroger's Berkshire's 24th largest holding at $805.6 million as of November 25th. Buffett's 13% increase in Kroger stock appears to be another conservative bet to protect against any economic damage done by the pandemic. Kroger has expected to release its third quarter results on December 3rd. They're likely to be very healthy. The grocer's Simple Truth private label store brand has been attracting new customers during the pandemic. In fiscal 2019, the brand contributed $2.5 billion in revenue. That will move higher in 2021. The only downside to Kroger is that it's facing a lot of negative public relations right now because it failed to reinstate its hero pay while authorizing a $1 billion stock repurchase program in September. Either Kroger will cave, and that will hurt earnings, or the company will hold its ground, and shoppers will boycott its stores. Berkshire now holds 18.94 million shares of Kroger stock, worth about $657.4 million, after about a 20% gain this year. I don't think it's enough for Buffett to care, but it's worth watching heading into 2021. Number 4. General Motors, GM. The other stock to consider that Buffett added to in the third quarter is Mary Barra-led GM. The holding company added 5.3 million shares during the quarter, increasing its position in the automaker by 7% to 80 million. Moreover, Kroger is not an expensive stock compared with the whole stock market. Assuming that Berkshire built a position in the early fourth quarter when Kroger's prices was around $25, it was only 12 to 13 times the expected earnings, far below the 15 to 20 times valuation of most S&P 500 companies. With the addition, GM is the 10th largest holding in Berkshire's portfolio. Its $3.6 billion position gives it a 5.6% stake in the company. With a big push into electric, this could turn out to be one of Buffett's better long-term bets. Investor Place's Chris Lau recently made some great points about why investors ought to buy GM stock. Clearly, Berkshire supports his viewpoint. In preparation for its pivot into EVs, GM plans to add 3,000 tech jobs. Investors should no longer look at GM as just an ICE supplier. Number 3. Costco, COST. Berkshire closed out its Costco position in the third quarter, selling 4.3 million shares. Based on a share price that gained more than 15% during the quarter, it's likely that Buffett sold its shares late in the quarter. According to whalewisdom.com, Berkshire first owned Costco stock in the first quarter of 2001, paying an average of $39.25 a share. Can you say profit-taking? The truth is, Costco was never a huge position in the Buffett portfolio. Go back 5 years and it owned the same 4.3 million shares. At the same time, they accounted for less than 0.5% of Berkshire's $127 billion portfolio. Like Kroger, it's a nice defensive position. Further, if you look at its valuation, a price-to-sale ratio of 1.04, much higher than its 5-year average of 0.70. There's an argument to be made that a possible recession in 2021 could make Costco stock a lot cheaper to own. I doubt that Buffett will buy back in, but you never know. Long-term, I like Costco a lot, but you'll want to give yourself a longer runway to gain than you might normally consider. Number 2. Wells Fargo, WFC. Berkshire has been a Wells Fargo shareholder for more than 30 years, counting the bank among its 5 biggest holdings for most of that time. It owns more than 13% of the bank in 1994 and boasts more than 500 million shares worth over $27 billion in 2016. Whatever hold Wells Fargo had on Warren Buffett has quite possibly been permanently destroyed as a result of the bank's refusal to hire a CEO that wasn't tied to Wall Street and big banking. They just have to come from someplace outside Wells, and they shouldn't come from Wall Street, Buffett told the Financial Times in 2019. There are plenty of good people to run it from the Wall Street banks, but they are automatically going to draw the ire of a significant percentage of the Senate and the U.S. House of Representatives, and that's just not smart. Number 1. Barrick Gold, GOLD. Has the price of gold peaked? Buffett probably thinks so. In the third quarter, Berkshire lowered its holdings of Barrick Gold by 42%, selling 8.9 million shares during the quarter. Now holding 12 million shares, it is the 32nd largest holding at 274.8 million, representing less than 1% of the entire portfolio. Berkshire only bought the gold miner stock in the second quarter at prices averaging $26.94 a share. It's likely Buffett sold the stock towards the end of the quarter when prices were hovering around $30. Down 21% in the past 3 months, gold prices have fallen off as the world gets closer to a post-COVID world where vaccines such as Pfizer's makes it possible to carry on with the economy. As China and the U.S. recover in 2021, I find it hard to imagine Buffett hanging on to the defensive play. If you own gold, I would follow Buffett's lead and sell while gold prices remain reasonably high. Do let us know if you ever invested in stocks. Please subscribe to the Stock Advisor. Thanks for watching.